Okay, so good afternoon, everyone. Thank you for having me. I'm Tamara, Executive Director at the Digital Euro Association, and it's an honor to be here today moderating this panel on the slow adoption of tokenization. And I'm thrilled to have such a remarkable lineup of experts joining me today. Thank you so much for being here. So let's start with a brief round of introductions, please.
Thank you. My name is Alfonso Gomez, and I have the privilege to lead our bank in Switzerland, BBVA Switzerland, which was the first tier one in the Eurozone dealing in both sides, with traditional assets and digital assets.
Hi, I'm Thomas, responsible for sales and partnerships at Trever. At Trever, we built like what we call a digital asset management solution, connecting banks, brokers, and other institutionals to the digital asset market, including the market side like trading venues, different custodians or custody solutions, and a settlement layer, including also the bookkeeping for end clients. Happy to be here, and thanks for having me.
Hello everyone, Simon from Cashlink. In here for Michael today, who couldn't join, unfortunately. And Cashlink is the infrastructure provider. We provide financial institutions and investment platforms with the regulatory but also technological infrastructure to issue, manage, and distribute securities on the blockchain. We are market leader in Germany right now. We have done approximately around 200 projects that were all issued on public blockchains. I think also a very interesting point. And we are also a crypto securities registrar. So we have the preliminary license from BaFin to actually be appointed by issuers to register securities on the blockchain, which is an alternative to the typical process that we have on capital markets via a CSD. So very exciting market for us. And even though the panel topic is adoption is slow, we're in the market since 2019, and for us it's a constant increase and a constant adoption. So we're very happy to be in that place at the moment. So very excited to be part of the panel.
Yeah, hi, Alex Bechtel. I'm the head of digital strategy of at DWS, which includes our digital asset or crypto business. DWS is the asset manager of Deutsche Bank, biggest asset manager in Germany. And yeah, happy to be here.
Great. So I'd like to start bringing some market figures to set the context. So currently, the market has a total tokenized value of $72 billion US, distributed across 82 tokenized products. By blockchain, Ethereum has 76% of the market share, followed by Stellar with 14% and Polygon with around 5%. And yesterday, we heard about numerous opportunities created by tokenization, so cost efficiency, atomic settlement, fractionalization, among others. And despite this immense potential and promises of tokenization, its widespread adoption has been a gradual process. So perhaps you can start with you, Alfonso, telling us what are the key challenges you see in the tokenization of assets and how BBVA is addressed them.
Yeah, obviously, there are many challenges nowadays in the market. As an incumbent bank, which is the case of BBVA with 167 years of history, obviously, when we start in this particular process, taking this new space, the most important topic that we have to take into account that is going to be the challenge one is the education. We need to make certain 100% that the entire team understand perfectly what are the advantages and what are the potential risk taking this space. And this is quite relevant because we do believe that we can demystify this industry. There are obviously many people that are bringing up different risks and different approaches, but there is no doubt about that tokenization can make the industry much more efficient. And let me share with you one figure I think is quite relevant. The amount the traditional financial industry spent yearly just in order to make the reconciliation of the accounts is $20 billion, which is pretty obvious that is a big amount of money and brings a lot of inefficiency to the system. Another example, which is a challenge for the traditional industry, and there is no doubt either that through tokenization we can correct this inefficiency, is the corporate actions that we have in the traditional industry, in the 1.0, I call this kind of industry. For certain timings during the year, there are many players that have 3 times more employees in order to resolve manually all these kind of problems. You see why is this the result for the atomic swaps comparing with the traditional swaps that we have in the industry. Obviously, you don't need 2 or 3 days for the settlements. So once again, I think education, we need to understand why the tokenization of assets can introduce much more efficient in the industry, and we need to understand why the traditional banks have the right to play a very important role in this transformation. This is going to be probably the most important evolution, I would say evolution and no revolution in the financial industry. And we need to understand how to manage and how we can create the trust. So the challenge is education. Education internally, within the organization, and afterwards, the most important thing, how you approach the customers and how you educate the customers in order to demystify, as I mentioned before, and how we can create the link in order to build up something that is extremely relevant. And talking about trust.
Great, absolutely. Alex, from an asset management perspective, what are the primary reasons behind this slow adoption of education?
So I think we must not forget that when we talk about tokenization and blockchain, that we are talking about nothing less than a fundamental shift in financial market infrastructure. And I think we in this, I in particular include myself, have been probably a bit too optimistic, or our beliefs have been a bit too romantic about the timeline and how long this might take. Right? So I think I've mentioned this before. I keep telling for 5 or 6 years that this is all going to happen in the next 2 to 3 years, and it always seems like it's 2 to 3 years out, and it still seems like it's 2 to 3 years out. So I have become just more and more skeptical about the timeline. I'm still convinced that this is the better technology, but I have stopped making predictions about when this is going to happen. And I guess there's a reason in particular why, for instance, banks are operating on technology that's 40, 50, 60 years old, right? It's not simple. It's extremely cumbersome to change core technology. And this is also why I believe this, and I'm happy to play with the skeptic here today, that it's probably taking longer than we all think until we are at this inflection point when it comes to tokenization. What does this particularly mean for DWS? What we have done, and here we probably have to differentiate a bit between the tokenization of assets and the tokenization of money, because what we have done is this year we have deprioritized anything related to the tokenization of assets in favor of, or at the expense of, focusing on the tokenization of money and crypto, because we are usually driven, of course, by the commercial viability of projects, and we believe that when it's about crypto and or the tokenization of money, that you have a higher commercial viability, a more immediate market need, more market demand. So we have said we start with cryptocurrencies. We're going to issue crypto ETCs soon. in the next couple of months. And we are also working on a stablecoin, so meaning we are tokenizing money instead of assets first, because we see a more mature market. And Tamara, you have named one number, and let me maybe mention that as my last point. 75 billion for the market size of tokenized assets. We have around 1 trillion market size in crypto, way more immediate market, way more demand, more liquid markets. We have 120 billion in stablecoins, so tokenized money. Doesn't maybe seem that much more than tokenized assets, but the big difference is tokenized assets, these 70-something billion, they are distributed around everywhere. You can't trade them really. There's no secondary market. These are very often only proof of concepts, very short maturity. So it's not really that we already have that market that we need in order to reach that inflection point. And this is why it's for us first crypto, then tokenized money, and very happy to focus maybe starting next year on tokenized assets.
Okay. Now looking for technical and regulatory hurdles. So, Thomas, what do you think are the most critical technical and regulatory hurdles that are impeding the faster adoption of tokenization?
Yeah, I mean, if I look at this topic and asking myself what are the hurdles there, and maybe starting with the regulatory side of things, I mean, I don't think that this is really a hurdle still. Because what we've seen within the last months and years on German level, on EU level as well, is that we have got a much more clearer regulatory frame for tokenization for digital assets. For example, in Germany we have the EWG, the Digital Securities Regulation, and we have seen the crypto fund regulation there, allowing digitized fund shares. And in the future, we will see, I think, with the future finance regulation in Germany, at least, allowing for digital issuance of stocks as well. So I think that the regulatory frame is quite clear. Also on EU level, we have the MiCAR and the pilot regime now giving this a much more safer environment for institutional investors to go into that space. So I don't see there big hurdles from a regulatory perspective. But I think, as Alex also already mentioned before, we are talking about a completely new market infrastructure when talking about tokenization and tokenized assets. So it's really difficult and really important to understand how this works and what's the difference compared to today's market infrastructures. So I have to understand I need someone who tokenizes the assets. I think Cashlink can tell you a bit more about this. We need a custodian, of course, and we need also someone as a crypto registrar. And if we have understood this, we have to bring this all together. So to orchestrate the different parts, to be able to use it in a convenient way. And that's a real hurdle I see from a technical perspective, to get a user experience that you are really able to understand and to handle all of those process parts.
Okay, so Simon, Cashlink has been involved in tokenization for some time now. What have been the lessons learned in terms of market acceptance and maybe regulatory compliance in this case?
Yeah, so I think in terms of market acceptance, there's probably two things that we should look at. And the first thing is really, and I think that's especially true for like established financial institutions, that there has to be a lot of understanding about what actually, like which problems are actually solved by the technology and by tokenization and DLT-based capital markets infrastructure. And this is something that we do not learn from PowerPoint slides or from like dry POCs. That's actually something we only learn when we actually jump in, you know, like the other day I heard something, I think it described it very good. You don't learn swimming from books, right? And the same with new technologies. And I think like we see examples on the market that actually go that way. For instance, Bankhaus Metzler, a German Frankfurt-based private bank that just issued the first, natively, like the first fund natively on a blockchain. And obviously, yes, this was also more in a POC setting, but it was a real security, a real fund unit on the blockchain. And this is something where you actually have to talk to your entire compliance department. You have to talk to all the lawyers. You have to get like the signature of everyone that is also, part of a normal transaction, and there you actually also understand the implications for the different players like within the institution. So I think only through this we actually learn it, we understand it, and then actually market acceptance can happen. So I think this is a very important point. And on the compliance question, I think it's very important to understand that reg always needs to be, like reg rules, tech follows. And we see a lot of projects that have the most sophisticated technological infrastructures, but they didn't really consider the regulations. And especially when we deal with securities, AML, CFT and so on, like we have to put this on the first priority and see what we can derive from regulation and implement it on a technological level, then also on-chain obviously and within the smart contract. So I think that's very important as well. Otherwise, you have the best solution, but it doesn't get you anywhere because reg overrules it.
Do you want to add?
Can I ask a question, Tamara? Yeah. So maybe Simon said something really important, I believe. We need to be aware of the problems that are being solved by tokenization. And this is honestly something I'm still struggling with, which actual issues we solve. And I think it's very easy to understand when the whole world is tokenized and all our service providers and market participants are capable of dealing with tokens and are connected to all kinds of blockchains. Yes, I see that we might end up in a more efficient market environment. But at the moment, in the first couple of years, I'm really struggling a bit with to see the advantages of tokenization. And what we have done is basically, of course, we are reading all the papers that are published and that say, yes, fractionalization allows you to give your retail clients access to products, which creates liquidity and so on and so forth. But when you dig 1 or 2 levels deeper, at least that's my current status where I am with my knowledge and my understanding, is that many of these promises don't hold in the end. And I can give you an example of fractionalization and giving retail clients easier access to products that are illiquid. So for instance, I mean, what we do, we have big infrastructure funds, so alternative asset funds. You have infrastructure projects in their big real estate projects, wind parks, private equity, you name it. All these things are not accessible for retail clients because ticket sizes are usually, I don't know, in the double-digit million range. So the idea is, yes, we tokenize it, and then we can decrease the ticket size to maybe 5 or 10,000, and then retail clients can get access. Now, when you take a closer look at that, is what we can already do today is we can decrease the ticket size because we are giving out a fund share. No one forces us to make a 5 or 10 million ticket out of it, right? We do it for other reasons. But let's now even assume we go down to 10,000. We would still not be able to sell this product to retail clients because these clients are regulated and structured in a way that they are only available to professional investors. So these are alternative investment funds, and I'm not allowed as an asset manager, and our distribution partners are not allowed to sell those products to retail clients. So I can tokenize it, but it will still be an alternative investment fund that's only available to professional investors, right? So I think we need to take a way closer look at all these promises. And let me give you one more example, sorry. When people say then when we tokenize it and make these ticket sizes smaller, we have a lot of liquidity. But when you look at where does liquidity in the market come from? Well, liquidity comes from market makers. Market makers are willing to put bids and asks into a limit order book when they understand how to price a certain product. If I have a huge infrastructure project, these things are extremely difficult to price. I mean, this is the reason why they are so illiquid. This is why you usually commit capital for 10 or 15 years to these things. It's almost impossible for a market maker to price these things and offer narrow bids and asks. So if you ask a market maker to provide liquidity for that, you will get huge spreads in the end. So also when you tokenize that, you won't get more liquidity. And I'm struggling with all these points. So where are the immediate advantages?
Just one very short note on that. I agree with the liquidity part, but yet we have a lot of highly non-fungible asset classes. And I think also alternative investment funds are part of that, but also a lot of other investment structures that we see on the market, especially in the institutional and professional area. So if we can make these for instance, fund units or like investment products more fungible, we don't have to, like they don't become more liquid, but they become more fungible. And this solves already also a problem, I think, of a lot of asset managers to get out of a asset, maybe not within, I don't know, 6 months or 12 months, because they maybe have even go to the notary because they were LP in that product, but they just transfer the token to a buyer that maybe wants get exposure in that asset class. And I think this is also then on the market side, like fungibility and feature that's actually quite interesting. But liquidity, I 100% agree.
Alfonso?
No, I think I completely agree. I think liquidity is key, and we need a secondary market. And it's pretty clear that we are in a very preliminary stage. We have the technology, and we need to see how the distribution channels are about to start. I think human beings are traditionally tend to overestimate the new trends of industry in the short term. And they are tend to underestimate the consequences of the new technologies in the long term. I think as the most important evolutions, in this case through blockchain technology, all this kind of new line of business are going to change dramatically in the next few years. And one good example, I think, is internet. If we analyze how was the evolution from internet from the 1997 to the 2023 nowadays, in 1997 we had 100 million users. 1997. I remember perfectly one Nobel Prize. He said that the effects of the internet were similar of the fax. See, he said that in 2000. Okay. As of today, we have 5.1 billion users of internet. It's pretty obvious that now we are speaking about something which is more relevant, because we are not talking about information. We are talking about obviously information, but we are talking about value. We are talking about money, and we are talking about a huge transformation about the financial system. But today, we have more than 400 million users in the blockchain technology. So the key question is, how big is going to be the adoption curve in the next few years in order to take advantage of this technology? How critical are going to be regulators? I think in Europe we are moving forward currently through MiCA. I think they create the most important milestones in order to rise, in order to bring up new opportunities to the society. And I think the interaction between universities, how is the case, with external players, with international authorities, and with incumbent banks is going to be absolutely critical in order to see tokenization as a common instrument in the next few years.
Great.
Sorry, I have a really important question again to Alfonso, because I think something that we need urgently in order to kind of get this ecosystem going is that financial institutions open up to public permissionless ecosystems. And my current perception of the banking industry is that they are very focused on private ecosystems and very afraid of public permissionless blockchain. So maybe you can give us an insight of where you see the banking industry there.
I will give you my view. I think when you are incumbent bank, and obviously I'm talking about on behalf BBVA Group, with 167 years of reputation, okay, you have many different responsibilities. The first one are your shareholders, okay, and obviously customers. Customers come first in BBVA. So you need to make certain 100% that you test all the technologies that you have, all the capabilities that you have in terms of distribution also, before to go, if may I say, the open sea, right? Having said that, as Philip Meyer said in the previous presentation, I think the best way to start is to start. And that's why we are dealing with Bitcoin and Ethereum in the market, obviously open market. And as you can imagine, you know, we are in a learning curve, and we are trying to understand where are the opportunities for our customers. We are trying to create opportunities also in this new space. But it's extremely relevant that we have to be extremely prudent in order to avoid one single mistake. In other words, we know exactly what's the direction, but we need to be very careful with the speed. That's my answer.
I'd like to touch briefly on the type of the asset. So we know that fiat collateralized stablecoins, which include the tokenization of cash and treasury bills, holds 96% of the total tokenized value in the market, followed by commodities and government securities. So do you think are there specific asset classes or regions where you see tokenization gaining traction faster than others? And if so, why? Who want to take this one?
Yeah, so I think we see a lot of traction in the alternative asset space. So what I also mentioned earlier, like when we have, for instance, certain infrastructure projects that you do not change the target group who that buys these products, but you change the nature of the investment product and have a digital investment product that's also more fungible. I think this is something in the alternative asset space that we also, as Cashlink, have a lot of clients and see a lot of traction. And in terms of asset classes, we the biggest use cases that we are seeing on the market that also have already today use cases and value for issuers, but also for other stakeholders in the value chain is structured products and is fund units. And of course, there will be also bonds and equities and so on. But because bonds and equities are mainly also traded on public market infrastructure, the use case there is also there, but the efficiency gain is or the pain is let's say less. But for structured products and funds, there is in terms of cost savings, a lot of advantages already today because of the legacy infrastructure and the legacy incumbents that have certain barriers and certain requirements to for instance structured products that really don't match the dynamics of these markets. And I think with intraday or even intra-minute issuances, you just have, for instance, especially in the structured product markets, just a lot of issues solved that we see today with legacy infrastructure.
Great. Thomas, we know that Trever is known for its innovative solutions in the tokenization space. Perhaps could you share some insights into how the company is pioneering new ways to address the challenges in acceleration tokenization adoption?
Yes, of course. I mean, as I mentioned before, I see hurdles regarding the technical environment and connecting to this new tokenized market. So what we provide in a kind of end-to-end solution is all you need to be active in that market, to be a part of the tokenized and digital asset market, starting from the access to the market venues, we are continuing to different custody solutions or custodians and connecting them all by a management system to transfer values and assets between all those venues. So what we provide to our clients, which are banks, institutionals, and so on, is a quite convenient way to enter this market, to have all those parts you need to be active there and have a UX you can really, I would say, easily handle and understand and therefore do not have any technical hurdles regarding deep tech understanding you need or something else, because we cover this at this point. You just have to follow the regulatory rules, to have like the negotiations with your partners, and then you can use the tech infrastructure behind what we provide to the clients. That's what we like to make the way as easy as possible to go that way, right?
Do you want to add?
No, I think coming back to the tokenization of assets again, I think we have the right to create the democratization of investments. And this is the proper technology, it's the proper vehicle, because we're going to be able to bankable many different assets. And talking about, for instance, private banking, you know, it's maybe the most important asset. Obviously, you have to take into account the traditional financial assets, but you move to the real estate, which is the typical topic. I think we have, as of today, the technology to create these kind of tokens. And the value is huge. And you can democratize and you can give the opportunity to the different investors and to the different customers to buy this kind of tokens with, obviously, if you have liquidity. So I think it is something that we need to have, or rather, we need to push smoothly, and we need to be aligned with the regulator. But it is something that is going to happen in the next few years for sure. Yeah.
Can I add one point, Tamara?
Yeah.
So to the last two comments, so Alfonso, I think we all agree on the vision you have just drawn out, right? And we all believe that this is going to happen sometime. Thomas, since you have mentioned the technology, when we look at new products, we usually look at three things, right? The first is there technological feasibility? That's important. Of course, you need also regulatory feasibility, and in the end, you need some form of commercial viability because we need to earn money in the end. I am least concerned about the technological feasibility because people like Thomas you're solving this, Thomas, right? I believe in you, so that's the smallest issue. The regulatory feasibility, we are getting better and better on that. We are moving in the right direction. We have EWPG and these things, so I'm also less concerned about that. But at least in the like immediate future, I'm concerned about the commercial viability of these projects because we have to sell these projects to our CEOs. And we need a business plan for that, and we need to show them that there is a black number standing at the bottom of the business case, right? So this is actually what I am most concerned about, and unfortunately, I think we need this immediate commercial viability in order to get this whole thing off the ground. Because if we can't sell to our CEOs profitable projects, no one is going to build in this area, right? So, and this is where I still have a bit of a knot in my head.
Yeah, I think it's a very very valid point. I will say that as I start my intervention, I think education is absolutely key. And the key question is if the chief investment officers in the traditional distribution industry are aware about these capabilities. And this is something that takes time. Obviously, you know, it's a question of evolution. In our case, in BBVA Switzerland, I can say that everybody are, you know, taking different education programs and training programs in order to make sure that we are ready in order to take advantage of these new protocols.
Great. We are almost out of time. I'd like to thank the panelists for the insightful discussion. Thank you.